gave up managing billions to become a better investor. Episode 32, Bigger BRICS. Hello, yes, it's time for another podcast, and kind of interesting to see over the last week both ups and downs on markets. I know it's August, I know it's supposed to be a holiday period and related, but as we've discussed before on this podcast, it never is a holiday period in the investment markets, at least in my opinion, it isn't. Kind of interesting to see, though, a couple of events before I get on to the main topic for today's podcast. That is the rise of the BRICS, or at least the rise in their perceived membership of the BRICS community. But more on that in a couple of minutes' time. First, we've sort of had some equity markets going up in the world and some going down, and the same really in the fixed income markets too. And I find that actually quite helpful. As you know, I think it's definitely an active investing backdrop, far from impossible, but not easy. And consequently, you expect, therefore, markets to be either side of zero, both sides of zero. Similarly, bond markets to do exactly the same. It's not as if one area is particularly massively outperforming and one is massively underperforming. And I would say the same, akin to what I said a couple of podcasts ago about the last earnings season, where when you look at sector analysis, it's not straightforward. And that's typically what you get, particularly in what I would regard as still the earlier stages of an active investment backdrop, which is you've got to pick your allocations, your sector choices, and your individual positions, be it equities, be it bonds, be it alternatives, however you want to describe those. You've got to pick them carefully. And that's what the world of investment, I think, should always be about. And before you know it, we'll start talking about how the 2010s was an aberration and matters such as that. For another time, or actually in reality, listen to the vast majority probably of podcasts over the last few months. But anyway, so an interesting week in markets, not boring at all. Three key areas, I guess, to talk about in the last 3 days. The first is what happened at Jackson Hole. Obviously, the discussions of a number of not just US central bank thinkers, but I noticed that ECB, Japanese Bank of Japan, members were there as well, among others internationally. Jackson Hole, I always find, though, is intellectually fascinating. No doubt about that. If you're into sort of central bank thinking and where matters may or may not be going over the next few years, there's a certain interest there. But in terms of hardcore policy making, yays, nays, where are we going? What are central banks going to do? I think probably correctly, central banks have moved much more into, well, we're going to make our decisions at correctly our upcoming meetings. We're not going to sort of try and say things a few weeks in advance at a general central bank thinkathon or something like that. You shouldn't sort of get fresh kind of insights or early leads at that point, just hints and thoughts and everything else. So that's really what it was about. When I hear, obviously, the Jay Powell thoughts, Chairman of the Federal Reserve, were absolutely critical and key, but essentially they were, in my opinion, the reasonable assumption that actually there's always sort of uncertainty, there's always matters to keep on thinking about, but they're really going to describe and think about matters and make conclusions about central bank policy at the September meeting in a timely manner after a whole new set of insights have been produced, which I think is right. And my conclusion already on most central banks around the world, they should already be holding interest rates. In fact, in some cases, perhaps considering reducing them, but at least holding them until we get to early 2024, and perhaps they've got further extra data to think about. So we shall see on that front. Not surprised to see actually US bonds, UK bonds as well, actually government bonds performing a little bit better in recent days. And my general thought would still be that I prefer equities to bonds, but really what I'm trying to say is I prefer choosing carefully equities over choosing carefully matters and opportunities in the bond market. Generally, I would say if I look across the whole of the rest of the year, my guess would be the average investor, if they made the average choice in those key asset classes, you'd probably make a bit of money. That would still be my instinct for the rest of the year. Second, I guess, key issue was a company which has become rather more known or better known in recent months than it was certainly 9 or 12 months ago, and that's Nvidia, which now is, depending on how you want to look at it, the 6th or 7th largest company in the world, well over now $1 trillion market cap, all very impressive. Kind of interesting to see that after their circa 200 and whatever percent share price increase year to date, the shares over the last this week, the last month or so, have been up a touch, but not very much. Kind of interesting. Their latest quarterly update a few days ago as I speak, and immediately after the update, which came after the markets closed on Wednesday's US market, and it was interesting. The reaction initially was very positive, and I can understand all the reasons why. There was good talk, good chat. They perceive a material potential improvement for Nvidia over the next few years, driven by, you guessed it, AI-related matters and associated. And sure, Nvidia is a clever company. It's not an irrelevant company, but as I talked about a month or two ago, it's also an expensive company. And even though expense is in itself not a reason to be ignoring a share, sometimes fast-moving companies appropriately, correctly, are highly valued. That's often the way it is, just like how sluggish, declining companies are generally not highly valued. You've got to work out across the future what is the correct forward valuation for a company. That's, as I keep on talking about, this is to me, the exciting world of investment analysis, particularly on the equity side. You've got to be forward-looking. You've got to say, right, what's going to happen next year, over the next 2, 3, 4 years? What's going to happen with their margins, free cash flow, operating profit capability? What is the fair value from all of this, and why? How does it interlink with macroeconomics and related matters? And Nvidia ticks a lot of boxes. I completely agree with that, and a matter you could still continue to say across a variety of, let's call it broadly, technology sector related matters. But as always, as you know, I've recently, for the first time in many years, sold some shares in Alphabet, a company I have high respect for, really like, they're a big personal user of many of their products. But I'm starting to struggle a bit more with the share price, despite the optimism and the areas they're associated with, and the fantastic range of matters within their broad business. But everything has a correct price. Nothing exists in a vacuum, but nothing also can easily justify a high share valuation. That's the way it is. So Nvidia, I've missed the opportunity. That opportunity, I think, was more prevalent for anybody who was clever enough to invest a year or even more ago. But well done to them, fantastic. I would take some profits out. And I'm not surprised that when you hit the hype, the excitement, the oh my goodness after the close Wednesday updates, futures in Nvidia are up another 5, 7, 8%. And what happened on Thursday's market? They didn't keep up that performance. When you look at how Nvidia performed on Thursday and Friday, albeit in still volatile and uncertain markets, and discussions at the Jackson Hole, what they were or were not going to say, etc., which impacted some markets generally. I think suddenly it's this sort of, oh my goodness, everything is fantastic. And then people started saying, well, hang on, maybe it is time to take a few profits and related. And the hype factor was certainly quite high. Great company, still going to continue to grow. An awful lot is factored in. I would be my brief summary. I'm still avoiding Nvidia stock, and I'm still generally picking and choosing my technology choices carefully. As I say, as a super summary of recent choices from me, I've taken some money out of Alphabet. I've added a bit more money back into Alibaba. If you like, I've increased my holding there. Again, driven by what I think is valued in and what is or is not correctly valued at this moment in time. And I've also added some money for the first time in many years into PayPal, or at least I've made 2 investments over the year-to-date period, both at around about the $60 price. And we'll see how that one works out. Personally, I think it's worth $80, but we'll see whether that's correct or not. Anyhow, bit of ramble on those important factors. Let's go and talk about the BRICS. Obviously, an interesting BRICS meeting. Couldn't make it to South Africa to attend it myself. Probably wouldn't have been invited in any case. I see Mr. Putin probably would have liked to have gone along, but probably probably correctly realised that he shouldn't probably be going for various reasons, but obviously was an attendant, albeit via Zoom links and related matters. What is, of course, fascinating about the BRICS meeting was not actually so much what the leaders of Brazil, Russia, China, India, and South Africa, of course, naturally, what they were talking about and thinking about. Clearly, the big headline was the fact that the BRICS is going to have to choose a new name. I'm not really quite sure what they're going to do, given the fact that they've said that a number of countries are going to join, namely Iran, Saudi Arabia, Egypt, Ethiopia, UAE, and Argentina. An interesting mix, fascinating mix of countries. And of course, raises the sort of question, well, okay, BRICS is already slightly bigger than the G7 economies in terms of GDP or proportion of the global economy and stuff like that. We can debate in terms of influence where that combined range of companies is, but of course, adding more names increases further the importance. We completely understand that. Why are they doing it? Why choose these countries? Are there better ones they could have chosen? More important, relevant ones? That's an interesting debate, and certainly there is no doubt that probably, I would say, led by China. I don't think it's a particularly controversial thing to say. Some of those choices have certainly been, well, we want to try to make sure that the BRICS Plus grouping is going to be discussing a broader range of global issues, which will give us an alternative to just a G7-centered discussion. As we've often seen, the G7 often isn't just the G7, it can be the G20. And I think even that grouping understands that you can't just have this very tight group of companies deciding what is correct policy for everything, inevitably, as democracy should be, or any broader discussion about global names. You should have a broader range of discussions going on. That's just how progress should be. And I'm not surprised the world is clearly becoming correctly a more global place. And you're going to have a range of different views and options as a consequence of that. Anyway, I thought it was quite an interesting move by the BRICS Plus grouping to expand. I think quite sensible. I think reflecting the fact that the world is changing, consequently, everybody sort of changes with it. Okay. I guess what was kind of interesting, because it doesn't really address the question, well, what does it mean about democracy versus alternative regimes? Is it just about trade, or is it about broader matters, ultimately potentially control of different underlying global powers and related? There's a broader discussion to be had there, I would guess, and certainly, as I said, I think when I look at the BRICS Plus new names, certainly I think it's fair to say there was probably an overweight influence from China, no doubt supported by Russia, but perhaps also a little bit supported by some of the other names, South Africa and Brazil, probably a little bit less so by India. What I find interesting, though, and I think reflecting the fact that obviously there is some debate about India and China, what the leaders think of each other, where have they positioned, and of course, inevitably, how should the G7 countries or the Western world, for want of a better phrase, the developed economies think about interacting maybe more progressively, more aggressively with India, let's say, rather than China? Is that perhaps how people should think? And it's fascinating. My personal view is that actually trade is always the key here. If we look at difficult periods of time for the global economy, and clearly the most overt recent period clearly would have been the World War periods, particularly naturally World War II. But if you think about that whole period, much of it started with the breakup of much of the then global trade in particular in the 1930s, issues which sometimes showed challenges at later decades as well, which only really started to turn around when some of the expansion of free trade capabilities from the 1980s and beyond have occurred. And obviously, I think that's generally something which most economic thinkers should agree with, should be happy with. But clearly trade doesn't happen by itself. Nothing is a vacuum after all. Things always happen within other influences and ranges and related factors. Anyhow, that's a longer term discussion, something which I kind of, as an investor, I have much more than half a sort of a head on thinking about it. It's super important, something which you have to think about, think about how it's going to change the world and influence how we choose investment choices and related. I tell you what I found most interesting, though, it actually wasn't so much the expansion of the BRICS per se. I kind of anticipated that would happen. Frankly, I'm also a bit surprised that they haven't gone even wider or further. I thought it was fascinating that China has been talking to India about they'd be happy for them to join the RCEP, which immediately raised the discussion, what on earth is that grouping? What are all these groupings out there and related? That is the regional comprehensive economic partnership, which is an absolute, somewhat difficult to say, let's put it that way. But it's kind of fascinating when you look at the list of countries that are in this Asia-Pacific free trade agreement grouping. You may know quite a few of them: Australia, Brunei, Cambodia, China, Indonesia, Japan, South Korea, Laos, Malaysia, Myanmar, New Zealand, Philippines, Singapore, Thailand, and Vietnam. So kind of an interesting 15 group combination. Particularly, I actually quite like the notion that you have, I think, in the only group of any note where you see China, Indonesia, Japan, and South Korea in the same grouping, because typically, and this is getting us back to sort of thoughts about G7 or kind of G7 versus BRICS. Should you be kind of trying to be in one or not the other? Should kind of India be kind of trying to join G whatever 10 or something, etc., etc. But I like the fact that we're seeing actually more of these trade groupings. And do I think India it'd be smart for them to join the RCEP? Absolutely. Because as discussed, I think trade is the great positive out there. And there may be a bunch of challenges in terms of other broader political issues, but ultimately trade is a step forward for us all. And so I think it's kind of interesting also to see how sanctions and related issues correctly are applied when perhaps countries make huge mistakes, huge problems, make huge negative decisions, which ultimately can lead to those broader negatives that we've seen out there in previous time periods. Ultimately, as I said, that interesting shift from the 1930s into the 1940s and related. Anyhow, it's a broader discussion in terms of should you be only doing trade with people that you have an agreement, full agreement with on the political side or not. Frankly, I think that would be incorrect. Far better to trade with people who are themselves at least in agreement with a certain level of trade backdrop which they feel comfortable with, and are trying to change and evolve their economies through ultimately the creation of wealth and everything that drives in the underlying families and population of that country. Something which, it's kind of interesting, isn't it? When I think about the world, when I think about how the likelihood of wars and all of those negatives that become attached to those, and it may sound idealistic, I know that, but I still am coming around to the view that as populations become wealthier, as the individual family becomes wealthier, as more people in the country own a house, have wealth, buy insurance products, maybe buy shares, are saving things for their children, becoming more educated, more aware of a broader world out there and related factors, like more beyond than just looking at a mobile phone or something per se. I kind of feel that there's more to lose through ludicrous wars, through just breaking up global trade just because you've fallen out of favor with somebody or a different country and related factors. And it's kind of interesting. As you know, I have the view that Russia made some huge, clear mistakes over the last 18, 20 months. And the impact of that is still apparent. But I think beyond those issues, mistakes, huge mistakes led by Mr. Putin, I come back to sort of the notion that actually there are other impacts from all of this, in the sense that I know there's been some negatives about, oh my goodness, it's got to mean that China's going to choose the side of Russia, different choices from that. Oh my goodness, we need to be only doing trade with now more an India or other parts of the world, perhaps a Mexico related in other sort of developing countries, rather than focusing on China or related. But I think actually it's a little bit more complicated than that. As I've said before, frankly, you could look to have more supplies from either domestically or from Mexico or from an India, without understanding that these countries themselves, just as most developed countries are as well, unless they fancy higher inflation or less supply or supply issues, are going to have to rely on a country such as not just a China, but a broader range of countries in South America, Southeast Asia, East Asia, and related, some of whom they may feel perhaps some uncomfort with. This is why actually I think when I look at the RCEP, I'm actually feeling that should be more talked about. Should India join? Absolutely they should. The fact that Australia, Japan and South Korea are in there, I think is a positive for those economies and common sense for that region. And even though it's not a naive, this is the only way to go, because as we all know, free trade itself has a bunch of challenges and issues, and it's never as free as you often think. I believe it's a good way to be shifting? Absolutely. We shall see what other broader impacts it has. All I can observe, though, is that as countries make silly choices, there are bigger negatives that go along with that, and not participating or not sensibly being cancelled out of full participation in trade, in related matters, actually only hurts your domestic population much more than other areas, other zones, even though there's always backhanded ways to keep some trade going and related factors. That's just the way it is. Overall, though, my observation is that the last few days, I know there's been lots of focus on Jackson Hole, probably a little bit overstated in my view. Nvidia excitement, a little bit overstated. Even the BRICS, or the expansion of the BRICS, it's not quite happened yet, is an upcoming it's not overstated. It's just, I find it interesting how it became a very big headline for a few hours and then dropped away very quickly. But that's actually quite important for the world. I would say that what's fascinating to me is the RCEP areas is so little discussed, and trade generally should be generally more discussed. Yes, there are a bunch of different trade organizations in the world, many of which we talked about on this podcast, many of which I've just sort of focused on in my own private research. But I would observe generally what it's made me feel as an investor is that it's not an impossible backdrop out there. That would come back to my usual conclusion, really. It's an active market. It's not impossible out there. It's not easy. But actually, these are the sort of questions you need to be asking. These sort of macro trade related issues, you've got to combine those with your sector company specific matters. And you can't ignore either of those broad areas or sides. So I'm still excited as an investor. Yeah. The glass is half full, which means I'm not naively excited. It's not always going to go up. It never does. And if you think that, then I guess you're going to find the world of investment ultimately impossible to be in. But I guess what I've seen over the last 30 odd years as a live investor is that it's not impossible out there. And the glass is always half full. And actually the darkest hour is always just before the dawn. So on that positive view, kind of opportunistic view, if you like, not just for the short term, but for the medium, longer term too. I'll end this podcast here. Thanks a lot for listening. We'll come back next week with some perhaps more relevant matters about investment choices and a few thoughts about investment matters to think about right here, right now. But thanks for listening and speak to you soon. Bye-bye.